Okay, hi everyone. So I guess this is the same presentation that I gave at EFCC, but the opportunity here is for you guys to interrupt me whenever you want and ask as many questions as you want. So yeah, I'm going to be talking about MEV burn, and the way that I think about it and the way that I try to sell it to the general public is as the equivalent of EIP 1559, but for MEV. So the mental model that I have in mind is that there's two use cases for block space. The first one is inclusion of transactions. So you want your transactions to go on chain and to get confirmed. And then the other one is specifically the ordering of transactions. So for example, if you're at the very top of the block, you're special and you can collect all the arbitrage. And when there is a competition for inclusion, you get congestion, just like a road which is congested with traffic. And then when you have competition for ordering, you have contention. You have various transactions that are contending, for example, to be at the very top of the block. And it turns out that the block value is really the sum of both of these things. So on the one hand, you have the congestion fee, which EIP 1559 has really managed to capture very well, which varies over time. And then you have the contention value, I guess, which we traditionally call the MEV, which also varies over time, but can be much more spiky. Okay, and just like we have a burn mechanism for EIP with EIP 1559 for congestion, we can have a burn mechanism for contention as well. Okay, now what are the benefits of burning part of this block value? And it basically boils down to two things. When you're burning, one of the consequences is that you're actually smoothing the rewards. So as from the perspective of a validator, you get a smooth income from issuance, and then you kind of get this very bumpy income from being a proposer. And so by burning the proposer rewards, you're left with the attester rewards, which are very, very smooth. And that, as we'll see, comes with various security benefits, especially for staking pools, as we'll discuss. And then there's another kind of aspect of burning, which is redistribution. Like the cash flow of this block value, instead of going to the stakers as a community, as a group, it goes to ETH holders, which is a broader, wider group. And as I hope will argue, those has economic benefits, very similar to EIP 1559. Okay, so I just want to give you a little bit of intuition as to how the construction actually works, and I'm happy to answer any questions here. So before we do that, we kind of need to refresh ourselves on what is proposer-builder separation, because that is the context in which MEV burn lives. So we have builders that submit bids. These bids are gossiped or shared with relays to form the bid pool. So the bid pool is either maintained by nodes in Enshrined PBS or maintained by relays in the context of MEV Boost. The proposer is able to access this bid pool and pick one of the bids. Generally, they'll pick the highest paying bid, or if they're censoring, they might pick the highest paying bid that comes from a censoring builder. They commit to the bid by signing it, by basically signing this block header, gossiping the block header, and this act of committing to the bid should give them a guaranteed payment as the proposer, either guaranteed natively with Enshrined PBS or guaranteed by the relays. And then once the proposer has committed to the bid, it's safe for the builder, the winning builder, the selected builder, to reveal the corresponding payload. And if we look at how Enshrined PBS specifically is implemented, well, at least the suggested design is to basically have various periods within a slot. So before the slot even starts, we have this bidding period where the builders submit bids to the bid pool, And then within the slot, there's these two phases that are kind of very important. The first one is the proposer committing to the bid, and then the builder revealing the payload. And the way that we make sure everything goes smoothly is that we invoke the attesters. We ask the attesters as a committee to attest to the timeliness, meaning that these consensus messages were gossiped on time. So we ask the attesters to commit to the timeliness of the proposal, which is this committed bid, and we ask them to attest to the timeliness of the builder's payload reveal. And the reason why I went to all this trouble to giving you all this detail is because MEV burn is a very simple change on top of this picture, and here it is. So MEV burn is the new added orange portions. So basically asking these attesters to observe the so-called burn floor, which we'll talk about. It's basically the highest block value that was observed 2 seconds before the start of the slot. And then once they've observed this burn floor from the bid pool, they need to enforce the burn floor. So they basically need to make sure that the proposal that was selected by the proposer has value at least the burn floor. And then this burn floor will be value that will be burnt, just like EIP 1559 burns the base fee. Any questions so far? Because this slide is, I guess, pretty dense.
So I have a couple, maybe just specifically on this slide.
Yeah.
The existence or the addition basically of a burn floor and this interaction between bidders and proposers going forward, does that increase the possibilities or potential for collusion around like where to set that floor?
Right. So that's a very good and advanced question. Here's how I answer it. So one very important property of this is that the incentives for the builders don't change, right? The way that builders profit is they will generally capture the delta between the top builder that is winning the auction and the second best builder. The reason that doesn't change is because the only change is on the recipient side of things, on the proposer that's now no longer receiving the MEV because it's being burnt. Now, on the topic of collusion, you might ask, okay, can the proposer along with the builders all collude in order to deactivate the MEV burn? And my answer here is that it's strictly simpler for the builders to collude among themselves than it is for all the builders to collude among themselves and to collude with the proposer, right? Because there's like one more party involved, and so it's strictly more difficult to coordinate. Now, let's assume that the builders are all able to collude among themselves today. Well, it turns out that they can get all the MEV for themselves. And it's something that we're not seeing today, right? There's about 1,000 ETH of MEV that goes to proposers, and the builders don't seem to be colluding amongst each other. They seem to be competing against each other. And there's no reason why MEV burn would change this, because as I mentioned, there's no change to the incentives from the perspective of the builders. Does that answer your question?
Yep, no, that does. So basically you're saying that like the solution space of what they could achieve by doing so is already here. This just narrows it and kind of adds the requirement to be able to collude also with another party, which is the proposers now, which doesn't exist in the current system.
Yeah, exactly. And to be quite honest, I'm a little surprised that the builders are not colluding more amongst each other, because they're making a fairly small profit margin by competing, but they could be making most of the rewards for themselves if they were not giving it to the proposers. But that's a different story,
Yeah.
I guess.
But the corollary to this, to a certain extent, is that given that proposers are losing a lot of value, or at least marginal value per block, they might be more incentivized to become builders themselves and then therefore vertically integrate and it's still like the same amount of parties that would need to collude, like N, but in certain cases, these parties would be more vertically integrated, i.e. more centralized, and thereby kind of going around the whole point of PBS, which was to separate these actors in the block space ecosystem.
So I don't think that's the case. And the reason is that if you have N builders, you just need one defecting builder for this mechanism to work. And if the proposer decides, okay, I want to vertically integrate and also become a builder, now you have N+1 builders, and if you can have one out of N builders, defecting, then certainly you can have one out of N+1 builders defecting. So I don't think that changes things.
I think that's a good answer, and I hope it's true. Let's not stay on this for too long. Let's keep going.
Okay, yeah, it is a very advanced question. Okay, moving on. So what is the definition of the Burn floor? Basically, it's going to be the maximum over all bids that are 2 seconds early. And by 2 seconds early, I mean bids that came 2 seconds before the start of the slot. And we're going to be trying to maximize the transaction base fees, which is known as EIP 1559 base fees, and this new thing, which is a block base fee. So every block will itself have a base fee at the block level, and it will be basically the bid value from the builders that they get from MEV. Okay, so that was the construction. It's fairly simple. And I guess the whole rest of the talk is around the benefits of EIP 15 of MEV burn. And the benefits fall into 3 categories. One is that we're enshrining infrastructure, and by doing so, we're providing a little bit more structure, a little bit more rigor to the bid pool and things like that. And that out of the bat is going to have some advantages. We also have advantages from smoothing the rewards, as I mentioned in the introduction. And we're also going to have benefits from redistributing the cash flows from the stakers to the ETH holders. Okay, so let's talk about advantages from enshrining. One of the cool things that we will get is very similar to the base fee for congestion. Which provides an oracle, an on-chain oracle that can be used by smart contracts. We can have a new oracle for contention. So just like Ethereum is aware of the value of its own congestion pricing, Ethereum as a blockchain can be aware of its own MEV. So nowadays, the bids from MEV boost can be totally manipulated in either direction. So for example, a proposer could just pick an empty block, which has 0 transactions and 0 MEV, despite the fact that there could be a lot of kind of latent MEV in the system, which is not being collected. And what a proposer can also do is they could spin up a builder and create a kind of fake block, which has a bid of, 10,000 ETH. And then this bid is just the proposer paying themselves from the builder to themselves, and they can artificially make these high bids. And so you can't use MEV boost bids as reliable data points and as an on-chain oracle. And I guess another advantage of enshrining is that you're also making ETH the asset more of a unit of account within Ethereum. So now, not only do you have to pay for congestion-based fees in ETH, but you also have to pay or settle the MEV payment in ETH. Today, if you wanted to, you could pay searchers and builders using any currency you wanted. So it kind of enshrines things a little bit here. Another advantage is around the trustlessness of bidding. So once we have enshrined PBS, builders and proposers will have the option to use 2 separate bid pools. They can keep using the MEV boost bid pool, or they can choose to use the enshrined PBS bid pool. And when we have MEV burn, we're basically like truly enshrining the enshrined PBS bid pool, and we're removing the option to use the MEV boost bid pool. And the reason is that in order for the block to get included on chain, it must satisfy this burn floor, and so the proposers really need to be getting their bids from the enshrined PBS bid pool. Another advantage is around censorship. So today, we effectively have two separate bid pools. We have a bid pool that is supplied by censoring builders, and we have a bid pool where all builders, whether or not they're censoring, are submitting. And some proposers have decided to only pick bids from the censored bid pool, and they're kind of pretending that the uncensored bid pool doesn't even exist. And so examples of this include Celsius, Jump Capital, and others. And what MEV burn is doing is kind of forcing proposers to select bids from this unified bid pool. They can't discriminate between censored and uncensored because, again, they need to respect this burn floor, and that sometimes will mean that they have to pick an uncensored bid pool. And I've talked to a lot of the censoring builders, proposers, and what they've told me is that really the only reason why they are censoring is because they can censor. And so if it was kind of technically impossible, or they have some form of plausible deniability or whatever it was, they wouldn't be censoring, because censoring is not fun. And MEV burn really gives them this protection that they need, or possibly gives them the protection that they need in order to stop censoring. Another benefit around censorship is the costliness of censorship. So before EIP 1559, we had this notion of a transaction fee before we had the base fee and the tip. And if you wanted to censor a transaction, you would pay the full kind of opportunity cost of not including that transaction. So if someone was willing to pay $10 for this transaction and you didn't include it, then you lost $10 in opportunity cost. With EIP 1559, you're only losing the tip, and generally the tip is much smaller than the base fee. So for example, right now the base fee might be 30 gwei per gas, and generally a tip of 1 gwei per gas is sufficient, so a 30x delta. And so the cost of censorship today is actually extremely small, because it means that you're ignoring a few transactions, but you're really, at the end of the day, just losing a few pennies of opportunity cost per transaction. What MEV burn does is, because this burn floor is trying to maximize both the transaction base fees and the block base fees, we're returning to this model where the opportunity cost of censorship is the full transaction value. And if you really want to censor a transaction for a long period of time, not only do you have an opportunity cost, but it's even worse than that. You need to subsidize, kind of pay out of pocket for the burn in order to sustain the censorship over a long period of time. And that's assuming we don't have inclusion lists. Once we have inclusion lists, that's kind of yet another layer of defense against censorship. Okay, so that is the end of the first section in terms of benefits from enshrining. Any questions on this first section here?
No, I think that's pretty clear. I really do like the message to make validators them again. That's definitely something I'm a huge proponent of.
Right, exactly. They, in a way, discriminating from different bid pools is a form of sophistication, and we're just asking them to do the simplest thing possible, which is to just pick the top paying bid from the bid pool. Okay, so let's talk about advantages of smoothing, and those are relevant to the staking pools like Lido. So one of the one of the features of MEV is that it's quite volatile and there's a lot of variance. And the median reward is significantly lower than the average, roughly 3x lower on a block by block basis. And there's some like big extremes. So for example, this block which Lido received, 691 ETH is 12,000 times larger than the median. And so if you're a small validator, you're effectively playing a lottery game, where most of the time in a lottery, you'll lose your ticket. You buy a $1 ticket, and most of the time you're going to lose. But every once in a while, you're going to win the jackpot and win this lottery. And this lottery mechanism is very similar to proof of work. And the economics, basically the fact that the median is lower than the average, is an incentive for the small players to pool in order to get access to the average return instead of the median. So if you look in proof of work, there's this kind of very staggering fact, which is that if you buy a mining rig, so for example, you spend, I don't know, $5,000 on a mining rig, more often than not, over the period of the lifetime of the mining rig, over the 5 years, you will mine 0 blocks. But you might get very, very lucky. You might mine 1 block, and you might make several times the value of your mining rig in this one time when you do win the lottery. And as we know with Bitcoin proof of work, there's enormous amounts of pooling involved, and we don't want to have this forcing function for pooling. I guess it is to the advantage of Lido in this case, but it's not necessarily healthy. And so burning basically provides an alternative way to achieving this fairness of income, which doesn't involve pooling. Another problem with the spikiness of MEV is around stealing MEV, and DOSing is one such example, which I've illustrated here. So imagine that you have 3 proposers in a row, and each proposer is entitled to some MEV reward. And now let's assume that the last proposer is evil and has decided to DOS the previous 2 proposers. So what does that mean? It means that the previous 2 proposers are not going to receive their share of MEV. But it's even worse than that, because the last proposer is actually going to receive the MEV that the previous 2 proposers would due to receive. Because most of the time, if you have some MEV, it can be transferred to the next lot. And so here you see in this instance, the last proposer is able to triple their expected amount of MEV, but they could do this opportunistically when there's a very, very juicy slot. So if there's 1,000 ETH of MEV, they can decide to DOS the proposer so that if they're the next proposer, they will receive the 1,000 ETH, not the previous proposer. And once you have MEV burn, now you don't have these incentives to go attack proposers. And it turns out DOSing is just one example of the types of attacks. You can try and do eclipse attacks at the peer-to-peer network level, and you can try and do these small reorgs as well. It can become quite adversarial. Another benefit of smoothing is that you're removing this, what I call rug pooling, which is basically rug pulling a staking pool itself. So in staking pools like Lido or Rocket Pool, you have the stakers that provide the ETH, and then you have operators that are trusted to do several things. And one of the things that the operator is trusted to do is to always redirect the MEV back to the stakers, back to some sort of smoothing pool. But there's instances where the operator is not incentivized to do that. The rational behavior in some instances is for the operator to take the MEV in a given slot and run away with it. And the reason is that operators are collateralized. So in the case of Lido, today they're collateralized with reputation, but in the future they might be collateralized with just financial assets. And whenever this the slot MEV is greater than the total amount of collateral, they're incentivized to run away with the MEV instead of giving it to the staker. And I think as we try and distribute these staking pools and allow more and more types of operators to join in, this attack is going to become more and more of a design consideration. Okay, another aspect which I guess is relevant to Lido is whenever the staker, the operator receives toxic MEV. So the definition, at least my definition of toxic MEV, is MEV where there's a clear victim, a clear user that has lost money, as opposed to arbitrage, for example, which is just latent MEV. And so whenever there's toxic MEV, there's a dilemma. Should we return the MEV or should we not return the MEV? And it's a dilemma that is kind of quite rich in the sense that, there's a legal question, there's a moral question, there's an accounting question, and so there may be a governance question. And I think Lido has received some requests, from victims to return the MEV, and my understanding is that the policy of Lido is to not be returning the MEV. And kind of one of the bad things is that if you try and be a very altruistic actor and you try and return MEV, you're actually putting yourself at a competitive disadvantage. And so in a way, all the good guys are being punished, whereas all the bad guys that never return the MEV kind of get prioritized economically. But there's a kind of a second flavor of this toxic MEV, which I call systemic MEV. Let's imagine that instead of a few hundred ETH of toxic MEV, we're talking about millions of ETH. And this could happen, for example, if one of the rollups gets hacked and there's like millions of victims. And so here, one of the questions we ask ourselves is like, what will happen if the staker uses this ETH to mount an attack? What will happen if Sasha, I'm doing a presentation right now. Sorry, that's my son. It could be that there's so much ETH that has been stolen here that we could find ourselves in a DAO-like situation where we need to use the social consensus in order to do a bailout, and that creates a fork, just like we have Ethereum Classic. And so by burning the MEV, we just completely remove these considerations around how to deal with toxic MEV. And then I guess a final slide on this smoothing aspect is that once we're burning the MEV, we're actually unlocking what I call stake capping. So we're basically making it feasible for the beacon chain to have a cap on the total amount of stake. And this is useful for a couple of reasons. The first reason is that it means that we can have a hard upper bound on the total number of validators, right? Because if, for example, we set a cap of 32 million ETH, and you need at least 32 ETH per validator, that means that in the worst case, we'll have 1 million validators. And validator capping is useful because it means that we can potentially have smaller validators. It means we can potentially reduce the 32 ETH to something like 8 ETH. It means we could potentially have shorter slots because we can achieve finality faster. And it might even be a stepping stone toward achieving single slot finality. Because right now, like the biggest impediment to achieving single slot finality is that in the worst case, we have these 4 million validators and we can't aggregate 4 million BLS signatures in one slot. Then another kind of interesting thing about stake capping is that we basically have a mechanism to burn the restaking proceeds, the yield from restaking, because not only do we have value that comes from congestion and contention, but restaking kind of adds a third component to the value of staking. And the way that stake capping would be implemented potentially is with a negative, an issuance curve which goes down as you get very, very close to the cap, and it goes towards negative infinity. And so you'd be in a position where you have to pay for the privilege to be a validator, because you get to receive, for example, a restaking yield. And the reason why MEV burn is important here is because it smooths things out, it removes the variance, and it doesn't exacerbate the pooling dynamic that I was talking about before. Because there's two components to the reward right now. There's the issuance, which is extremely smooth, and then the MEV, which is very, very volatile. But if you remove the smooth part, then you have even more volatility. And so it's important to smooth the MEV before we can even think of doing stake capping. Okay, so that was the end of the second section on smoothing. Any questions here?
I do have a general question, which is like, what are the trade-offs? Because so far everything looks like super rosy and good, but maybe we can get to it at the end. Yeah,
for sure. Let's talk about some of the trade-offs at the end. Redistribution. So here it's all about redistributing cash flows from the stakers to the holders. And the way that I think about it is that today we have a surplus of staked ETH. And if you want to kind of look at this blue circle of staked ETH, it's composed of two parts. You have the stakers that are here because there's rewards from issuance, and there's some fraction of the stakers that are here because we have this additional reward from MEV. And the way that we've designed Ethereum is that it's meant to be secure, even if there's zero MEV, even if there's no activity on chain, we still want the beacon chain to be secure. And actually that is where we were before the merge. Before the merge, you only had rewards from issuance. And so arguably, any kind of non-zero MEV that's going to the stakers is overpaying for security, because we have this kind of security from issuance alone. And there's kind of two consequences of overpaying for security. One of them is around the balance of ETH between what I call economic security and economic bandwidth. So you have ETH, this pristine collateral money, which could be used for two use cases. On the one hand, it could be used for staking, economic security, or it could be used in context of DeFi, for example, stable coins and economic bandwidth. Now, imagine that we enter this massive bull run with tons of MEV. What will happen is that the beacon chain will absorb all the liquidity. Think of it like a sponge, because there's going to be so much rewards from MEV that all the ETH will go to the beacon chain, and there's going to be a drought within DeFi land, within the EVM, and applications that need this economic bandwidth will have to pay a huge amount for it. So the cost of money goes up. And once we have MEV burn, we have predictability on the total amount of economic security, as opposed to having a potential imbalance and potential unpredictability. And the second aspect of having this excess or this surplus stake is around issuance. So the way that the issuance formula is built is that the total amount of issuance is the square root of the total amount of stake. And so if we have a little bit less stake with MEV burn, we're going to have a little bit less issuance. And so we're going to be removing unnecessary dilution for ETH token holders. And not only, so basically when we look at total economic efficiency of MEV burn, there's kind of two components. It's a double whammy. On the one hand, we're reducing the issuance, which improves the scarcity of ETH for the asset, but we're also increasing the burn. And I tried to quantify these two things somewhat conservatively. And my estimate is that we're talking about, roughly speaking, 250,000 ETH per year of reduced issuance and 250,000 ETH per year of increased MEV burn. And so, yeah, it is a very significant optimization of, on the order of 500,000 ETH per year, which, makes ETH, the asset, more ultrasound, I guess, more scarce, and may increase the price of ETH. And then there's kind of this other kind of very interesting optimization, which is around taxes. So if you imagine that you have a company and you have cash flows that you want to redistribute to your shareholders. There's like two preferred techniques. The first one is dividends, where you're basically giving dividends to the shareholders. But another technique, and this is what Apple is doing, is that they're buying back Apple shares and increasing the scarcity of total Apple shares and increasing the price of each share. And it turns out that dividends in most jurisdictions are taxed as income, whereas buybacks are taxed as capital gains because the price of your asset has gone up. And I think in most jurisdictions, income tax is significantly larger than capital gains. So, for example, in the UK, where I am, income tax is 50%, capital gains is only 20%. And so by moving to this different model of rewarding the actors within Ethereum, we're significantly reducing the sell pressure from taxes to nation states. And yeah, that's pretty much it. So yeah, happy to answer questions.
Yeah, I think maybe if you can just go over like what are some of the main trade-offs of MEV burn as a process, or in terms of like in general, it seems like it's a good thing in a lot of different respects.
Right.
One, it continues to kind of like isolate the responsibilities of these different actors in the block space and the block proposal ecosystem. It, especially in the last section, you kind of talked about the indirect benefits that it would have both at the network layer, like less people would want to run validators and there would be less validators overall. So that's great. But what kind of trade-offs or cons might there be?
Right. So I've actually written an ETH research post where I go through like some of the considerations. One of the downsides, as always, is that this is, I guess, more complexity, more things that we have to do at the consensus layer, and we have limited amount of bandwidth in terms of what the client implementers and the researchers can and the broader community can tolerate. And maybe you want to prioritize things other than MEV burn. I guess more technical downsides. One of them is that there's a splitting attack. So it's a little technical, but basically what a proposer can do is they can, a malicious proposer can do is that they can try and pick a bid value such that half the attesters think that the bid value is above the burn floor, and half the attesters think the bid value is under the burn floor. And so they've kind of split the attesters into two groups, and that leads to chain instability. I guess the answer that I have to this is that proposers can already split the attesters into two groups using the timeliness of the proposal, right? So proposers are meant to propose within a certain threshold, and they can kind of propose just at the threshold, such that half of the attesters see it as being on time and half the attesters see it being late. Another thing that I haven't talked about is that just like there would be a block base fee, there would also be a block tip. And the reason is that MEV burn is a partial burn. So I guess this is one of the downsides of the scheme, is that it's not perfect. And if we go back to the slide with the 2 seconds, basically any MEV that comes in the last 2 seconds won't get burnt. Instead, it will go to the proposer as it does today in the form of a tip. And so, I guess there's two downsides here. Like, one of them is that really the benefits from MEV burn are qualitative as opposed to they're quantitative as opposed to qualitative, right? We're reducing the total amount of MEV by an order of magnitude, but we're not completely removing it. And so some of the attacks around MEV stealing, still to some extent do exist. And then the other downside is that there's an optimization game going on where the proposers are incentivized to try and guess what will be the burn floor in such a way that they pick the smallest burn floor possible and thereby maximize the tip. And the answer that I have here is very similar to the splitting attack, which is that this already exists today. So today, proposers are incentivized to be sophisticated by basically delaying as much as possible the proposal. So there's a threshold today, there's a deadline of 4 seconds, and it's to the advantage of proposers to propose as close as possible to this 4-second deadline, so as to maximize the total amount of MEV in their block. Of course, they take the risk of not making it on chain and getting reorged, but very sophisticated proposers will basically pick the time just right so that they still get included on chain, and they maximize the amount of MEV. So in a way, some of the downsides that already exist today, which are splitting attacks and optimization games, will still exist with MEV burn, and just the nature of these things changes a little bit. One of the questions that I get a lot is around what is going to be the economic impact for validators, and I actually argue that this is very much beneficial for the stakers, and it's quite a subtle and argument, but let me try and make it for you guys. So one of the observations is that there's a cost of money associated with ETH. So once you have ETH and you lock it in a box, you're missing out on placing ETH in some other box, which might give you a yield. And so if we assume, for example, that the cost of money is some percentage, let's say 3% annualized, what we should expect when MEV burn happens is for the yield to temporarily kind of tank, but then a bunch of validators to exit the system and to go get yield in other places where they get the full cost of money. And then over time, the APR of staking will go back to where it was, back to the 3%, let's say, as the total number of validators shrinks. And so on a per kind of validator basis, you'll get in the equilibrium the same APR. And so if you're making, let's say, 3% a year, which is about 1 ETH per 32 ETH validator, you're going to keep getting that in the equilibrium. Now, if you're thinking from the perspective of USD denominated returns, things actually get improve, because not only from an ETH denominated return standpoint, you've maintained your 3%, you've maintained your 1 ETH per year, but this 1 ETH will actually be worth more from a USD denominated standpoint, because the scarcity of ETH will have improved. Now, putting aside like this argument, there's various arguments. There's a couple arguments for why MEV burn is better for some individual stakers. So one of them is around for the small stakers. Now they can benefit from the average returns as opposed to the median returns, and because the median is lower than the average, most small validators, almost all small validators, will be better off with MEV burn. And then there's this second aspect around the taxes, whereby your tax bill will be significantly lower as a staker, and so again, you'll at the end of the day, net of taxes, you may be making greater returns. And another thing I guess I should say on the fact that the USD denominated returns is that stakers are huge ETH holders, right? You're getting 1 ETH per year, but you have 32 ETH of principal, and so the fact that your ETH will grow in value as an ETH holder should be to the benefit of stakers.
All right, that was pretty extensive. Thank you. I see one last question in the chat. Max, maybe you want to ask it, and then we can wrap up.
Yeah, for sure. So the question is pretty general in terms of the MEV. So there is a way of like enforcing the efficiency of ETH by like incentivize to find the transactions that generate the income, and then like sharing this income with builders and with proposals. And with like existing of MEV burn, would it affect, or maybe not, like the incentives for like the bots finding the arbitrage opportunities to exist? Because they like can be a bad way, but they're a good way in ways of making the market like better in terms of more efficient.
Right. So I guess one interesting thing about MEV burn is that it doesn't change the incentives upstream. So basically at the very beginning of PBS, the searchers, the builders, none of their incentive change. And the reason is that the searchers, the top searcher will make the delta between it and the second best searcher, and the same for the builders. The top builder will make the delta between it and the second best builder. I mean, one of the questions that I get is around, okay, are we basically forcing every single proposer to extract as much MEV as possible per slot? And isn't that bad, because it means that we're basically maximizing the amount of toxic MEV? And if you look at stakers like Vitalik, for example, Vitalik has decided to opt out from PBS altogether, and he's just building these very naive blocks that don't extract MEV from users. And I guess my answer to this is that once like toxic MEV in a way, at least some part of it is orthogonal. Is orthogonal to MEV burn. So we have different solutions like encrypted mempools that remove the toxic MEV. And so MEV burn really is about burning the excess MEV that isn't given back to the users. For example, with MEV share. So these encrypted mempools, not only do they prevent front running, but actually they facilitate back running. And facilitate the refund of any excess MEV back to the users. So in the end game, I expect that MEV burn is really about burning the latent MEV from arbitrage, and not at all kind of changing the dynamics around maximizing toxic MEV, because it simply won't be any toxic MEV to extract from users. Now, I guess one question that I get a lot is around whether or not MEV burn removes some of the sovereignty of proposers, right? Because now proposers, they must, select a bid which is above the burn floor, and that's like constraining. So, for example, it means that proposers can't self-build. So whatever Vitalik is doing today, he can't do it with MEV burn. Basically, the answer that I have for this is that we have inclusion lists. An inclusion list is basically self-building. So how do inclusion lists work? Basically, as a proposer, I'm going to self-build this very simple block just by taking transactions from the mempool and ordering them by gas, just like what Vitalik is doing today. And then I'm going to submit this inclusion list to the next builder and basically force the next builder to include all of those transactions for the block to be valid. And so what that means is that if for example, I'm an altruistic proposer and I really, really care about censorship resistance, what I could do today with self-building, I can do tomorrow with inclusion lists. And then there's kind of this other use case that some people want is this idea of pre-confirmations. So they want to use, some users want to come up to have some sort of bilateral agreement with the proposer, some sort of promise that their transaction will be included in their block. And this is also something that can be done with inclusion lists. Basically, what the proposer can do is promise that they will include the user's transaction in their inclusion list, so that when their time comes, their transaction will make it on-chain. So inclusion list kind of gives you almost all of the sovereignty that proposers already have today. In particular, they give you sovereignty for censorship resistance and for pre-confirmations.
Awesome, thanks a lot for that. So I mean, for inclusion lists, obviously that it's great both from a censorship resistance perspective and ensuring that block proposers at least get their chance to include any of the transactions that they themselves want. But I guess it removes the possibility, although I don't know why somebody would want to do this. Maybe they're an artist, of proposing like a completely empty block if they wanted to.
Right. I mean, they could propose a completely empty block, but they'd have to pay.
They'd have to pay for it.
Yeah.
As if the 32 ETH wasn't enough, but yeah, okay.
Right.
No, that's great. All right. Thank you very much, Justin. That was really, really, really great presentation.
Thank you so much, guys.